Hand over to you. Jimmy Young, thank you very much.
Okay, thank you, Simon. Welcome, everybody. I've done a few of these for Simon. Sometimes I bring in PowerPoints and do more of a lecture, but I find people kind of like the live trading idea. So I decided to not so much wing it. I've actually tried to prepare something so that I can give you a feel for the way I trade and also possibly mention some trades that look good right now. The idea being twofold, give you a little feel for the real thing, and at the same time, since you can go back and listen to this recording again, I'm going to show you exactly the way I trade pretty much. So if you wanted to, you could go back and copy it pretty much and use the ideas or combine them with whatever you do now. Simon mentioned I have a wealth of experience. That becomes very so what in 2017. The market has completely changed. Today's traders are gun and run, very short-term traders. Nobody's really too concerned with the big picture. Nobody's really concerned with the fundamentals beyond trying to scalp the news. Just a different world out there. So I'm gonna show you what I know, what I use, for better or for worse. Starting with this. This is kind of my guide. The pound-dollar pair is the pair we're looking at. I traded the pound-dollar at the institutional level for 20 years. I was responsible at a bunch of major institutions for that one currency pair, for all the clients of the institution, prop trading it for the institution, handling the orders of the other branches of the institution's traders, etc. So I like the pound-dollar to begin with. And what I like the most about pound-dollar is it's the most volatile pair, meaning on a given day, its range of all the majors defined as the pairs that include the US dollar, it moves the most. So I think about moves the most, meaning possibility of getting on a trade and it moving enough over a period of minutes to maybe an hour, enough of a move that I can make my 15, 20, 25 points or get in the good 15, 20, 25 points and move the stop to break even kind of a deal. In other words, it actually moves. I find that to be the most important consideration. Now, what these two lines are, I'm going to take them off and put them back on for you and show you how they're put on. You can do it with any software. You would go to Studies. It's an envelope trading band, which simply means you take a moving average. In this case, I'm using 60-period moving average, a simple moving average, which means you're just taking the close of the last 5 minutes, 60 periods, adding them all up, dividing by 60, and it gives you the average of the last 65-minute periods. And I'm using a 0.1 variance, which means the two lines I'm drawing, one of them is 0.1% above, and the other one is 0.1% below the 60-period simple moving average. I'm looking at a 5-minute chart. So if I was to go Studies and go to simple moving average, 60 periods, and say, okay, this would be the 60-period moving average line. 0.1 more or 0.1 less is what an envelope does. It tells you if when it's 0.1 above your moving average or 0.1 below it. How much is 0.1? Well, if you're looking at the pound being $1.26, $1.27, it's approximately 13 pips higher and 13 pips lower. So if you consider this to be normal, the market's moving along at normal, and considering a deviation of 0.1 to be within the tolerance. So if you had a water test done on your property, I think of that example because I had a water test done last week. If you have a water test done, your water don't have to be absolutely perfect as long as it's within an acceptable range. So I consider 0.1 or below, above or below, to be saying that nothing is really special going on in this pair. How could you use it? If it gets up here, maybe it's going to go back down. If it gets down here, maybe it's going to go back up until something happens. What do I define as something happens? Well, either some kind of news or something. But certainly when it gets outside of these two lines, when it gets more than 0.1 from the moving average, I assume something's going on. So if I looked at this right here, I would say not much is going on. Now the second thing I look at is I look at a 1 hour chart. All right, the same simple moving average band. I'm looking at a 1 hour chart. Now these 5 lines I put on the chart are very simple. What I'm looking at is, where is the price at the beginning of the day? Well, you know what I could do? I could erase them. Edit, delete all objects. Okay, so I consider the beginning of the day to be 10 p.m. London time, 5 p.m. Eastern time, which is right here. This candle here is the beginning of my day. So lines, add lines, horizontal, high, low. So right here, I consider that to be the beginning of the day. Now I know if you looked at the last 14 trading days and you said, well, about how much does it actually move in either direction? Like, how much does it usually go up or down? Now, I keep score on that one. So if I look at pound dollar, this is how much it moves every day. Now this here, you know, this is looking at a daily chart for the last 1, 2, 3, 4, 5 weeks. To me, that's like about as far back as I'd possibly want to go, because the market really doesn't look much beyond 3 to 5 days back these days. But to give me some perspective, I can see the pound took a big dive because of the hung parliament news. You know, that happened 2 weeks ago Sunday, and then from there it was on a little bit of a recovery, and it was stalling. But we had 3 out of 8 guys said that they want to raise interest rates in the UK. That was unexpected. That helped it along, and it was doing okay, stalling out. But then the guy in charge of the UK central bank, that would be Mr. Carney, he came out and said, I'm not going to raise interest rates. They're crazy, these guys on the committee. There's no way I'm raising interest rates. So the pound took a dive. Then yesterday, we had one of the guys who's among those 8 guys. He was not one of the 3 out of 8. He was one of the 5 who did not want to raise interest rates. He said, you know, I think I want to raise interest rates. So now that evens the score at 4-4, so the pound did okay yesterday. Now coming into today, the new vote, whether they're going to raise interest rates or not, is 4-4. But the deciding vote goes with Carney, and he's saying no. So the pound is still shaky. Now looking at this, the pound is basically heading down. So most likely you want to be more bearish than bullish on the pound. So then when I look at my chart, I'm thinking, okay, I want to be bearish. So you're going to be looking for sells. And how has it been looking on the hourly chart? Well, it's looking, if you're using the same bands, you can see it's staying on the, it's in the middle. It's tried the top side of it twice. It looks like it wants to try to go down here. But this morning I was trading it. This is an hourly chart. This morning I was trading this. I usually trade the London morning, go back to bed, get up and trade the US morning. So usually I like to trade from about 7 to 10 a.m. London time and from 8 to 11 Eastern time. That's my 6 hours a day I trade. You know, down here we were breaking the low of the day and it didn't go. It went back up. So it doesn't look like it really wants to go anywhere right now. So that's okay. That's okay. So there ain't much to do with that pair. Now the last thing I can show you about the pound I want to tell you, and this may be very helpful for you because this is something you can directly trade. And what that is this. The UK retail sales monthly report, the UK consumer price index, CPI report, the employment report, and the GDP, these are all leaked, it appears, every month. So about 30 minutes or less before the news is scheduled to be released, you'll start to see the pound moving, sometimes 10, 20, 30 points. And then the news gets released, and lately, the first thing that happens is it doesn't really do what the news says it should do. What do I mean by that? I can show you very quickly what I mean by that. If I was to look at, say, pound news, UK news. Yeah. All right, so here's the retail sales. Back on May 18th, the market expected 1.2. That was the consensus forecast. It was almost twice as good. It was 2.3. These are percents, by the way. So much better than expected, so the pound should go up. Did the pound go up? Yeah, it went up 62 points. It didn't go down at all in the first 15 minutes following the release. That's what normally is supposed to happen. Here again, the retail sales in the UK, much better than expected back in March, and yes, the pound went up. That's normal. Here's CPI, inflation. Inflation, when it comes in less than expected, we should expect the pound to go down, and yes, it does. So those are normal movements. Now, what's been happening lately is we're not getting the normal movements at first. So the other day we had bad news, and the pound went down for a matter of seconds, 3-5 seconds, not even a minute, and it popped up. Eventually it worked its way down again. So the trade, one possible trade is 30 minutes before any of these scheduled news releases. You can see these on any economic calendar. There's 5 or 6 of them a month. And you can see these all, and 30 minutes before these news events are coming out, start looking at the chart. If the pound-dollar pair starts to move, maybe you want to take and jump on it with a tight stop. And before the news comes out, get out of the trade, or maybe take a chance and run it through the trade, although that's a lot more risky. So that's what I can tell you about the pound. Let me move on here. Moving on to the euro. You can see the same thing. There's nothing going on with the euro. It's just staying within its bands. If you look at the bigger picture for the euro, if we were to look at an hourly chart, the euro has been doing pretty good. So let's see if we can see a little bit more. So maybe a week. So this is how the euro looks over a whole week. So it was weak. It started to get strong, and now it's nothing great. It's much better when it's first time it's going through these lines. It's much better, especially if it agrees with the shorter term. So nothing special there. But I wanted to tell you this. When it comes to the euro news, the only one you got to worry about is the ECB press conference. Comes out once every 6 weeks, and that always causes the market to move pretty big. Well, usually does. I wouldn't say always, but that's the only one. So you don't have to worry too much with news with the euro. Moving on to, yeah.
Sorry, a few questions coming in about the band lines.
Yeah.
The red and green bands, what are they? And Winston?
Sure.
Do you start the upper band and buy the lower band? Is it as simple as that?
People love the bands. They just love bands. Yeah. Okay, so once again, I'm going to do it again. So it works like this. If you go to studies, moving average, simple moving average, 60 periods. So that's simply a 60 period simple moving average. Now, an envelope band puts a line a percentage above and a percentage below your moving average line. So whatever that moving average is, you can calibrate. Any software will do that for you. You go to envelope trading bands. I got my 60 period moving average, which is the black line, and I want to know 0.1%, a little tiny bit more or less what it is. I say okay, and it draws it for me. So I believe that once it goes outside the band, something's going on. And when it's inside the band, nothing's going on. But when it gets near the top or the bottom of the band, this would be a sell area, then this is a buy area, until it starts to do something. That's it. Is that clear?
I think I get it. Yeah. Is that okay, everybody that was asking? We had 3 or 4 questions on that. So I think that's clear that up. Thank you.
Okay. All right, so let's move on to the dollar-yen pair. Now here's the bands with the dollar-yen pair. So you can see the same thing. Okay, over here, as soon as I see a candle completely outside, I'm thinking sell. And if it gets above this line, I want to be out. So selling over here at around 111.40. As you can see, it went down almost 50 points, which is pretty good. Now, eventually, it starts getting above. And you can kind of see from the size of that candle, I'm not the only one who looks at something similar. But over here, now you're thinking up. Now, because we're thinking up, anytime it comes close to the red line, it's a buy. So that's a good buy, a nice buy for a move back up. Now, it's wrong if you get a candle completely below the red line, a candle completely below. So that was completely below. This is touching, doesn't count. So until we get a candle, so what could you do? Let's say I do 2 things with this. First thing I do is I look for retracement, and I like to see everything line up if possible. So this has been the lowest price it dealt, and that's been the highest. Now that's a 78.6 retracement, that's 61.8. So you can see that it came right to the 61.8% retracement. So if you think it's going up, it retraced 61.8%. It also touched your lower band where you think it's still not a sell, but it's close. So when something's not a sell, but it's close to a sell, it's the ultimate buy. So it's a great buy in there. And the stop loss would be if you get a candle completely below here. Now, you may say to me, well, I don't know there's going to be a candle completely below. What happens if we get a candle that looks like this? Then I lose, I'm going to risk all of that. Well, what is all of that really? See, sometimes when you trade, guys, what you want to do is try to get away from fantasizing and get to reality. Even if you didn't know, there's no evidence on the whole chart that a candle would be that big. None of the others are that big. But if there was, and it closed all the way down here, you get stopped out. Let's call it 85, 110.85, and you bought at 111.10. Well, that's 25 pips. That's not the end of the world. And more likely, it would be something closer to over here, perhaps. So it would probably be something more like 03, and you got in at, say, 10. So you're really risking only 7 pips. That's the reality. But even the fantasy of it being a big one, try not to be so afraid of trading, and if you're going to be afraid of it, make sure you should be. Now, in the case when there's a news event, perhaps you should be, and we're going to get to that in a moment, because then you could get a 50-point type of a loss. But that's how you would trade that. So right now, that was a buy. Now, for scalping purposes, if you're getting in over here at 10, as I said, you just put your stop loss you could put your stop loss at, say, if you want it as tight as you want it to be, but you got to give it some chance. So I like to say 10, 15 pips at least. So if you bought at 10, you put it at even, you put it over here. Now somebody's going to say to me, yeah, but Jimmy, wait a minute. The lowest it's been was over here at 95. I want to put it at 90. I would say good idea. But keep in mind in today's markets, in today's kind of markets, very possible you break the low by 5 points and then it goes right back up. So I don't really find putting stops below lows and above highs to be very useful these days, because frankly, I think that the market targets those levels to stop out the amateurs. That's I mean, I'm sorry, but that's what I think. But you can see now this went about 20 points to the good. It did go 20. So there's your trade. You know, you're looking for a short-term trade. Now, if somebody was a longer-term trader, they could say to me, well, you know what I'm going to do, Jim? I'm going to buy it. I'm going to put it goes 20 points my way. I move my stop to break even, and I put my profit target up here somewhere, you know, near this old high. Can I do that? Of course you can. Everybody trades differently. What that would mean is if you put your stop could be 10-point loss at the most, and now it's going to be nothing, and you're trying to make 75. That means you got to get 1 right out of 7 to come out ahead, which is good. Let me move on a little bit, make sure I can cover everything I wanted to cover with you. Trying to give you an idea of what's cooking here. Now, the 10-year interest rate, okay. When I'm looking at the dollar-yen pair, I'm interested in the 10-year interest rate. Now, why is that? Because if you look, you'll see that every time the U.S. Does something with interest rates or says something about them, if the 10-year interest rate shoots up, so does dollar-yen. The dollar-yen pair is very sensitive to the 10-year interest rate. So if you go to investing.com, where is it? No, that's not it. This one. All right, yeah. If you go to investing.com and then and you just put the number 10 in this search box and hit search, it'll pop up the 10-year yield. You see how the 10-year yield is shooting up? This is a 5-minute chart. The 10-year yield is shooting up the last 20 minutes, pretty much since I started speaking. And in the last 20 minutes, 5, 10, 15, 20, we got that move up in the interest rate. So you'll see that if you look at it down and then up, you can even see that the 10-year, oops, didn't mean to do that one. Let me put that back for now. And let's see if we can get that back one more. You can see the 10-year was going down and then back up in the last hour or so. Before that, it was going up. And if you look at dollar yen, it's been doing pretty much the same thing. So the 10-year will follow it pretty closely. The other one is the stock markets. So if I look at the Nikkei and the U.S. stock markets also, so I look at that also. So let's take a look at what that looks like. I assume what we're going to see is the dollar yen will follow the Japanese stock market. It'll follow, to a lesser extent, the U.S. stock markets. I look at it in bulk, but mostly I focus on the Nikkei. So you can kind of see the Nikkei been going up the last 15, 20 minutes. And so that's another thing you may want to look at. You know, you can set up your charts any way you want. Now, I did mention, jumping on to the dollar CAD, I did mention you got to be careful that you can get a big spike. And what that big spike there, right there is a news event. Now, the beauty of it is we talked about these lines, right? Now, we got a sell signal, a technical sell signal. You can see we hadn't been below the red line in quite a while. We've been above it. So this is a technical sell signal, first candle completely below it. You know, from there, I'd be looking for the green line to sell. I'd be looking for Fibonacci retracements to sell. That looks like it was a nice 50% retracement there. I'm not sure. Take a look. There to there and 50%. Looks like it could have been a 50. Yeah, so there's a 50%. So you can see from the highest to the lowest, once it gave the signal, it did retrace exactly 50%, possibly a level to be selling. You could sell down here, but then the problem is the stop loss. You know, where do you put your stop loss? Probably above the high here, or maybe above the high here, or maybe a full candle above. You don't really have the choice. I don't like to put stops for more than 25 points, preferably 15 or 20. So waiting for something like here, you know, that gives me a chance. I can get away with perhaps putting a stop over here above this high and above my green line at least for 20, 25 points. You know, I wouldn't be able to take that one out. But again, I don't worry too much about what happened way back there. I'm interested in what's happening over here. But see, now you have a technical sell signal and a fundamental one. Now, what do I mean by a fundamental one? Well, jumping ahead here, let me just put that down for a minute. Put that down. Let me show you what I mean by a fundamental one. So this is today. So we had news today for Canada retail sales. A tradable difference, 0.6, is good for 50 points. And the last time the Central Bank of Canada spoke, they said that, you know, the Canadian economy has absorbed the low oil price. Things are looking good here in Canada. So I'm thinking, okay, we're going to get a good retail sales number today. And a good number would be better than forecast. So in this case, the forecast was 0.3. The actual number was 0.8, and the dollar Canada pair spiked 50 points lower, which means the Canadian strengthened. It did exactly what it should have done. We were thinking it would need a 0.6 to go 50. The difference between what we got, 0.8, and what was expected, 0.3, was only a 0.5 difference, a little less, but we should have expected a spike down in the dollar Canada pair. Now, if you're trading this, you say to yourself, let me just go back one here. If you're trading this, you say to yourself, okay, the news is coming out right now. I'm already in a technical sell signal. I already had a retracement of half, and now I'm making a new low, and now I have news I think will cause the pair to go lower. We're taking a shot, but of course it's risky with the news because you don't know. You get a spike this way. If the news was good, you would have got a big spike that way. Now, I trade binary options for news events like this because my risk is limited, but I don't want to go into that because binary options have a connotation of being a big scam, and people with a little knowledge of trading believe that, so I'm not going to go there. But trust me when I tell you they're actually not a bad thing if they're used properly, because they do have a limited risk and they have a limited reward. And they're really not bad, but I know they have a bad rep, and I know there's some scams out there with them, so I'm not going to go there. So I'm going to move on. And the other thing with the Canada is oil price. So check it out, guys. This is a 1 hour chart for the last 3 days. And you can see the the Canada pair has been going up. So the Canadian's been weakening, and the price of oil has been going down. So when the price of oil goes down, the Canadian should weaken, dollar Canada should go higher if nothing else is going on, because that's a normal. That's what happens most of the time, but not all the time. So today, when we had that news coming out, that would be 3 hours ago, we want to look and say, well, what's oil doing today? Well, today, oil had started today. It started today at 22.60, and when that news was coming out, it was 22.68. So it was actually doing slightly better. So the oil seemed to be on its way back up a little bit before that news. So if you're going to bet on a strong Canada, a lower dollar Canada, not too bad before that news, because oil at least is going up now. If it was down here, you'd want to say to yourself, I don't know. But then again, if it's already done that, it's already going to be reflected in the price as well. So it gets a little complicated. I know you guys much prefer to look at lines and trade off lines, and I think that's okay. But I think there's just more to the game than that. Let me finish up the last couple of pairs. See what we got here. Now here's Aussie dollar, and you can see by this slope of the line, the Aussie dollar. I'm looking at the last 24 hours, by the way. 5-minute chart, 289 periods is exactly 1 day. So let me just chart border settings. Let's make that a little bigger so you can see what pair that is. There you go. It's an Aussie dollar 5-minute chart. We're looking at 289 periods, which is exactly 24 hours, the last trading day of 24 hours on a calendar. And there's your exponential trade envelope trading band, 60 periods with a 0.1 variance. You see it? Envelope trading band, 60 periods, 0.1 is the variance. So you can see, okay, so the Aussie's weak. So as it comes up here, as long as it doesn't make a candle completely above here, these are sell areas. So you got sell areas all in here, a little move down, a sell area here. This is clearly some kind of a news event. It's what it looks like, or an end of day. Over here, now these potentially are buys. I'm not so crazy about the buys, although they work perfectly as well because we're in a downward movement. The buys look a little better as this line starts to slope up. So this, you can see you're already starting to slope up, and these are potential buys. Sell, buy, sell, buy, sell. Buy in this area, but it went through. So now you start that process of, okay, I'm looking for a sell. So I would normally ask you guys to tell me how I would find my sell here, because I've already told you a couple of times. But since this is not a formal mentoring, I'm going to do it for you. Lines, Fibonacci retracements, high, low. This has been the highest. That's been the lowest. Somebody may say, okay, let's see, if we go to 50% as a minimum, did it make a 50? Yep, exactly 50%, and off again. So you see how that works? So you got officially edit. It looks like it's giving a bona fide, okay, this wants to go down again, you know, after all of that sideways stuff. So now as it retraces, you know, you don't want to sell it here, put a stop way up here, because frankly, you guys are not going to put that kind of, well, I'm not talking for everybody, but most retail, I've been a mentor for 12 years already, so 13 actually, and I know that most people try to get away with 10, 15, 20, 25 pip stops. Nobody really puts big stops in, hardly anybody. So that's not going to work. Now over here, as this starts to come up, you know where the 50% is. You know that you can, if you sell at 49, you could get away with putting a stop, say, at 64, and 49, 59, 64. That's 15 pips, not bad. But now, of course, if you're going to risk 15, you got to be thinking in terms of you probably won't make much more than 15. You know, again, if you have a different kind of strategy, you're going to hold it for days. But if you're day trading, you know, it is short term. And another thing I like, you know, again, when you look at the Aussie dollar pair, you know, what you can look at is say, well, you know, this is a daily chart once again. This is what it's been doing. And you say to yourself, well, each day, well, how much does it actually move each day? 0 being the opening and this being the close. Well, that day, on the day, it went up 20 points. The last 3 days, it went down 25, went down 20, went down 20-ish, maybe 30-ish. You see, this would be 50, so it didn't go down 50. Let me just make that bigger in case you can't see it. Yeah, so you can see 50 points from open to close on any given day for the Aussie dollar pair to actually close 50 points lower. That's about the most it can do in a day, and close 75 or 40, 50. It doesn't really move that much. So when you're trading the pair, you know, in the last 3 days, the most it's moved from the start of day, the most it moved was up or down 30 points. You can't start thinking you're going to catch a 50-point trade in this on a given day, because the chances of you doing that, you can see it hardly ever does that. So I like to look and say, what's it been doing recently? You know, I use statistical numbers for it, but the same idea is here in chart form. This is something you could do yourself. You have a picture of this on the recording to look at. If it helps you. There's not much news for Aussie to worry about. If you look at the Aussie news, there's the only Aussie news to worry about. There hasn't been one news event the whole year in Aussie that's caused a 50-point move. The closest we got was 48 points on a bad GDP number. But the only ones you got to worry about are interest rates, which is once every month, the Aussie interest rate decision, and then their employment report is every month. That one moves the market. and then GDP and CPI. That's it, just those four. And again, you can see it here. You can see it on the recording. If you want to copy it, you're welcome to. With the UK, these are the ones for the whole year that actually moved the market. Most of them related to, the big ones is Prime Minister May speaking, the parliamentary election, Connie speaking. These are the ones that move it big time. Other than that, these are the regular ones. These are the four we mentioned. Now, there's nothing coming out to July 12th, for example, so you don't have to worry about UK news other than the unscheduled stuff related to the Brexit. That can happen at any time. That's just that's kind of like that's what it is, right? We can do about that. All right, let's move on. And last one we got is New Zealand. New Zealand yesterday, we had some news on New Zealand yesterday. And that was this New Zealand news. Can you see how the news, it can really blow out the chart? So we had a buy over here. We got a buy signal over here. It did give us that buy on the red line deal. But then the news was coming out. So with a binary option, you could do something like this. With regular, it's hard. But you can see it was very strong. Now over here, it gave a sell. So you'd be looking to sell this on a retracement, and it didn't work. So lines. You could be looking to sell this one from the high to the low. That's a 78 retracement, but even a 50% retracement. You could be selling over here with a stop above here. So that's 57 and maybe the 72. So it looks like you just about would have got stopped out. 15 points, not bad. They're not going to all work. Not everything works. All right, we're at 10:39, so I got another 6 minutes before Q&A. So let's see if we can find any trades right this minute. And you can follow them through to see how they work out. Okay, this is a sell. We missed this one because I talked too much, but that would have been a sell. And again, if you get a candle completely above. None of this has been completely above, so we're going back to periods, maybe 600, 2 days. All right, you can kind of see it. Let's take this line in the middle out. It looks a little less confusing, but you can kind of see with the pound, sell, buy, sell, and it's been a sell the whole time since then. But that would have been a sell, and again, if you make a candle completely above, or if you want to know what your risk is, just put a stop above the high. Like I said, a lot of times above the high doesn't really work out so good. It takes you out and will go right back down, but you need something to work with, and that's the accepted one that most people do. This was, by the way, this was that guy speaking yesterday. Yeah, that was this was Haldane, the guy from the UK central bank, when he spoke, and that caused that big spike up. But you can see once again, by the time he spoke, we already had a buy signal. So the buy signal was already there. It's arguable, it looks like he spoke over here, but I think he spoke over here. And in fact, I was trading this yesterday. I actually got myself in a tough one because, well, I'm not going to get into it, but I needed it to close below 92, and it did the candle before and the candle after, but not right on the hour. I needed any one of these. So it kind of stunk, but anyway, you can see that right over here. This is something I look for. You see the size of that green candle there? That's bigger than any candle here. This whole move down, we didn't see a green one like that. And all of a sudden, you get 3 of them in a row. And then you get the pullback, probably 78%, at least 50, and another leg, and another pullback, and another leg. But I think that the news itself was probably known down here. that first little leg, believe it or not. I'm not one to you know, be really big on the big guys got all the inside information and all, but I think in this day and age with computers, that because of the internet, that actually a lot of this stuff is yeah, it's not a bad little scalp trade type of a deal. You know, that's a quick jump up there. Let's keep going here. I was saying, because of the computers, the internet, I think a lot of things get hacked these days. The UK admits that 100 different places get their news events. The ones I showed you, not the ones where the government's speaking, where the central bank's speaking, but the ones related to the economy. They admit that those are like 100 different people get them beforehand. So for them to be getting leaked, it's very possible, especially because of the hacking, I think. Euro dollar, nothing's happening with this one. It's just holding in there. It's in a bullish, you know, it's bullish. At it, you know, it got bullish over here, and it's hanging in there. You know, these are potential buys, still potential buys with a stop below, you know. And again, that would be a short-term trade. I'm a day trader. I trade, you know, I trade for a matter of minutes. I have a very unique style of it. Dollar yen pair is still doing good. Judging from what I see here, I think if we looked right now if we looked at the 10-year, it would also right now be making a new high, which it is. You see, it's just made a new high as we speak here. That makes sense. That makes sense because to a great extent the dollar yen pair follows that. So that's something I track all the time. So actually, and it deviates at times. So, you know, you can see, I can kind of keep track of it. You can see that the 10-year bond has been going down and dollar yen following it. More than the Nikkei. The Nikkei hasn't been as good as an indicator of the dollar yen pair. The 10-year bond has been better. It does switch back and forth at times, and I just try to trade what's been happening the last few days because that's the best I can do. The Canada oil correlation, another one. You got a case where, yeah, the oil price has been going down, dollar Canada should be going up. That confuses people because they don't realize that when the central bank comes out and says that the economy is looking really good, that offsets the lower oil price, and hence the Canada can still stay the same or strengthen even though the price of oil is going down. Until the effect of these two news events kind of wears off, then the last 3 days, with the oil price making new lows and starting to look into panic level, if you will, we're starting to get Canadian weakness. Only today we had another news event to get it rolling back in that direction, which made sense. I hope I haven't spoken too fast for you. You can go back and watch this again and again and again. Keep in mind, I've been doing this every day for the last 37 years. So, you know, I tried to give you a lot of good information. Probably the only thing you're going to wind up taking away is these two lines, because everyone, you know, we're all lazy and we like to keep it simple, but there's probably one or two in there who say, you know what, that's good stuff. I can really learn from this guy. So I'm sure you'll get great benefit from it. And the rest of you enjoy those two lines. Okay, so Simon, it's your turn. I talked myself silly. I put the blue screen up. So questions, if any?
Jimmy, yes, you're right. It is the blue, it's the red and the green line that most people are still asking about these lines. All right, so we can recap what they were. I think that if I'm right in saying it's a 60, they're an upper and a lower percentage of the 60-day moving average.
You know what, Simon? We're going to put you on the spot here. We're going to call it Simon, and we're gonna put you on the spot here. So instruments, I go to more instruments. I go to pound dollar pair, and I say add, and say okay. Gives me a chart, and then I'm going to take it to 5 minutes.
Mm-hmm.
Yeah. Then I'm going to go studies.
Yeah.
And if I just put a moving average and I put 60 periods, I'm using simple. Because of computers, we have adapted, displaced. It sounds like it sounds like autism to me.
60
Moving
periods,
average, simple.
60 days, 60 trading days is the same.
No, 60 periods. You're looking at a 5-minute chart, so it's 65
Oh, sorry,
minute period.
forgive me. Yeah, there we are. Okay.
Right? So there's the moving average itself. Now, if we said 0.1% higher or lower, 0.1% of this number is going to be 13 pips. So if this number right here, it tells you in here what the moving average is. So can you read out to me what it says for the moving average all the way at the bottom? 126. Information all the way at the bottom.
126,636.
Let's call it 126.64. So if we add 13 points to 64, we get 77. So if we go up to 77, 75, your little thing is in the way there. I can't see it. Let me move that over a little bit.
You're seeing the control panel, yeah.
Yeah, 77. Let's see. Now it's. Let me do it once more. So what I'm trying to do is I want to put. Let me zoom in. I'm showing you this so that it can make it really, really easy to see. So edit, add arrow. So what I want to do is from the 64, I want to add 13 pips. So 77. So if I put 77 here, that's where the upper line should be. And if I do it on the other side, that's where the lower line should be. So 64 minus 13 is 51. Okay, so now when we put 0.1% above and below, it should be right there and right there. Does that make sense? Or still way too complicated for most people?
No, I think that makes sense. I think some people just missed the explanation. But Gina's saying as well that if you're using an MP4 platform, you just put it in envelopes. Yeah. Yeah,
you just go to envelopes and you have to play around with it a couple of minutes. You know, it's got to be 13 pips away based upon a 126, a 127, a 128 handle on the pound dollar pair. You follow? If this is 140, it would be 14 pips. So you know if it's wrong, Simon. Like if you put it as 1%, look what happens. And when you're doing the variance studies, if you put 1% here, it's gonna now it's putting it 130 points away. You follow?
Yeah.
Now if you put something really small, if you put 0.01, well, then it's going to put it's going to put it right there. It's not 13 pips. So the way you do it is you have to understand what you're doing.
You do.
If you understand what you're doing, then that doesn't look right. And it certainly doesn't look right 100 points away. You need to understand what you're doing, that you're looking for 0.1%, which is 13 pips. You know.
Does that work on for the hour chart? Do you still use the same 60 periods?
I don't really look at it on the hourly chart, but I think it's a good guide because it'll still give you the same idea. In general, which way is the price flowing? To me, the hourly chart is too much information.
Yeah.
I'm really only concerned with what's going on right now. That's about it.
We're talking about day trading, yeah. So you work on the 5-minute chart.
Well, when people say day trading, I think when we're talking about day trading, we're talking about people trying to put stops in for 10 pips. Do you think that's correct, or do you think people risk 40, 50 pips on the trade? I think when they're talking about day trading, they're talking about risking 10 pips or less, maybe 15 tops. So under those conditions, why you want to be looking at hourly charts or daily charts, other than there's no purpose in looking at all that other than to see the general direction. But when your stop is so tight, you need to be looking at information related to what's going on right this minute, because the biggest story doesn't matter.
Yeah, indeed. Okay, thanks, Jimmy, says Tina. Ripple said, what is the win rate using envelopes? I don't, do you have any?
No, I don't look at it in terms of win rates and loss rates. What I do with the envelope is it's a very good guide for me. It's a very good guide to say, okay, let's just go back to, let's look at a different one. We'll look at dollar yen just to look at a different one than pound dollar all the time. When I look at it, it's a very good guide for me. So it's telling me now that I should be selling. I should be bearish. It's telling me now I should be bullish.
Mm-hmm.
You know, and what's important to me, like when I see a candle from 30 to 45, if you looked in most hours, if we were to look at an hourly chart, I would bet that a 15-point change for an hour, it may or may not have happened today. 15-point change in an hour, meaning a blue or green candle in dollar yen today for 15 pips. So when I see a 15-pip movement, I got to get my money. I got to pay myself because that's your opportunity. That's the real world of trading. So what I mean is if we put an hourly up, let's look at the size of, these are whole hours, right? So before this hour, well, let's look at it. Here's the big one. How many pips was that from open to close? It opened at 59, it closed at 37. All right, that's 20, that's 22, right? 30, yeah, 22 pips. That's 20 pips. Your three biggest ones, that's, we'll call it 19, they'll call it 20 pips. So your biggest ones are 20 pips, and these are around 10 or 15. And this one here at the moment is 22 pips. So that's extreme, you know, and that's where it is now. So when you see it move quite a bit real quick, like in 5 minutes, you got to be taking the money. That's where you pay yourself. That is the game of short-term trading, because you can look and see that when this hour is over, what are the chances of this being up here? Well, statistically, no, 0. And if you were to go back in time, if we were to double, if we were to go to 2 days, I don't see anything bigger than this the last 2 days. If we were to go 3 days, you see what I'm saying? Nothing's bigger than that. So in the last 3 days, that 15 pip movement in the last 5 minutes, you better pay yourself, because that's about as much as that's more than it's moved in most of these whole hours time frame.
Mm-hmm. Wendy says, sorry, I left for a while at the beginning. Could you give me the parameters of the 2 or 3 lines? Jimmy, let me do this. I think this is the same. We're looking at the black line in the middle with the 60-day.
You know what we could do? You know what we could do?
Average.
Simon, I have a video. I have a video I've done of the lines and all that. Anybody who wants it, they can just send me an email, and I'll email them back to it. And I promise I will not email them other than to give them the lines. I won't try to sell them anything. I got my word.
Before you do go though, Jimmy, if people do want to get in touch with you or have a look at because you do offer the services as a mentor, you run a trading group.
Yeah, well, I can show you that. Let's see, Internet Explorer. So when I left the institutional trading, that was in 2005, and I started. I made a website, and EU. Where is it? There we go. Let's see. I wonder if that's going to pop up my email box. No, it didn't. So it's the currency pair EURUSD, and then the word trader. So it's kind of long. If I was to do it again, I wouldn't do it that way.
You can put it in the message box now, so you should be able to.
Yeah.
Yeah, there's your website.
Yeah. So here's my background. I was institutional currency trader for over 20 years. Really institutional currency trader. If you click on this, it will give you my LinkedIn profile. If you click on my about, it'll give you comments from traders from some of the biggest institutions in the world I actually traded with. So I actually done this. Now, what I got to offer, Simon, is all I got to offer is my view, my current view of how I look at the market after doing this every day for the last 35 years. I don't have any magic formulas. I don't have any answers. The market's constantly changing. We're in a world of algorithms and Nintendo traders looking at second charts and jumping in and out, and they're quick as hell, and they're making money, and it's a different world. So that's all I got. I got a live trading room. I can show you that if you like. If I got 1 more minute, let's see. Here's my trading room, and it's not meant to be a trade call service. It's just meant a place where I usually have 20 people. That's it. That's about all we ever show up. At the moment, I have 22, and we get together and we talk about the market. Here was that. I explained to them. I mentioned earlier I expected the number for the Canada to be better than expected, so I can get in on this using my binaries. A lot of people don't, so tough one. And just little comments. There ain't that much, as you can see. In a given day, we don't talk so much. At the beginning of the day, going back to the beginning of the day, every day I give them that spreadsheet we were looking at earlier, the one with the news events and all archived, and then a quick video, couple of minutes, 3, 4 minutes, 2 minutes long, saying, this is what happened today. This guy Hardane said something from the UK and blah, blah, blah. This is what's big for tomorrow. Keep an eye on that. And that's it. So that service, they can read about it if they want. And
yeah, it's absolutely fantastic. I've put your email address and the website, and
yeah, it's all good.
I think, like you said before, if you're in any doubt, you just Google Jimmy Young, and there's so much on the internet that you've done over the years that they can find you in many different ways. Or you can contact myself. I'll put you in touch with Jimmy.
Yeah, that's fine. That sounds good.
Well, Jimmy, thank you so much again for us. Good luck with that house move. I hope you settle in okay.
Always a pleasure, Simon.
Fantastic. Take good care, and we'll keep in touch. I'll take the presenter role back from you now.
All right. Thanks, guys. Bye-bye.